One dilemma that I've covered here on the channel numerous times over the years is, does it make more sense to buy than rent? Well, did you know that at this current moment in time, it is literally 52% cheaper to rent than it is to buy a home? And I know it's not all down to just the house payment that makes or breaks or whether or not it makes more sense for people to buy or rent. Sometimes there's more to it than that. But even with all the other arguments that can be made towards buying versus renting, it's pretty hard to argue right now that buying is the right decision when we have this big of a gap between buying versus renting. Now, check this out. The last time that we saw figures anywhere close to this was right before the last housing crash. In fact, before the housing market crashed, back in the second quarter of 2006, it was 33% more expensive to buy than it was to rent. Only 33%. Today it's 52%. And we all know what happened next. Now, am I saying that because it's more expensive to buy than rent, that that's going to cause a massive housing crash? No, not necessarily. But what I am saying is that because it is so much cheaper, and it's likely to continue that way until mortgage rates and or prices come down substantially, then I don't see how most people are going to be choosing to even buy versus rent right now, because the financials and the fundamentals of it don't make any sense. And a lot of people won't even have a choice, let's be honest. Like, if people are looking at a $3,500 a month house payment, but you can rent that same house for $1,900 a month, it's a no-brainer, okay? It's like, why would you spend that extra, first of all? And a lot of cases, you might not even be able to spend that extra because it is so much higher. Most people aren't going to be able to allot that much more of their monthly budget towards a house payment just because they don't have the money. Now, according to CBRE, they're the ones that put this real estate info together, and they say that the cost to rent versus own should be roughly equal in a more or less balanced market. And even then, even if everything was all equal and the buy versus rent was exactly the same, it was $1,900 a month for that payment, you're still going to pay more to own than rent. That's the reality, guys, because it costs more money to maintain a house. It costs money when you have repair bills, when things break, when unexpected expenses come up. I've shared with you guys numerous times in my videos as well, different real life examples from you guys who send me things and can show you that things do come up when you own a house, and those are expenses you don't have as a renter. Now, am I advocating that people should rent forever and never buy a house? Absolutely not. I think most people should buy a house at some point, but it's getting tougher and tougher to find any sort of argument that makes sense in the favor of buying in this environment. And by the way, I'm over here in Eastern Shores today. It's been a long time since I've been over here, so let's see what we find over here today. Now listen to this. Back around 2010, it was about 12% cheaper to buy in the US than it was to rent. And that was because home prices had absolutely cratered back then. Around 2012 was actually the bottom of the market. But from 2010 to about 2014, it was cheaper to buy almost everywhere than it was to rent. I actually remember this pretty well since I was working in the real estate industry here in Miami, living here on my own, kind of starting my life. And I remember, the biggest problem seeing this as somebody working in the industry was like, oh great, I could get this house payment for cheaper than it would be to rent something similar, but the problem is I can't afford it. When you're 23, 24 years old, you don't have a giant down payment saved up and no help from the bank of mom and dad either. Even though the house payment would have been cheaper than it would be to actually rent, you're still stuck renting because you just don't have the money. And also, let's not forget, we were still recovering from this massive recession that had just happened along with the housing crash. So we had a lot of issues back then that really hampered growth in our economy and in turn kind of limited how much money there was to be made. Especially as a young real estate agent still kind of getting into the business, it was very difficult to start from the bottom at a time when everybody was hurting. Like most people were not buying real estate, so it was very difficult to make a living in real estate, especially in Miami back then. And even though the monthly house payment compared to what the rent was cheaper, I still couldn't afford it, guys. In fact, my wife and I were not able to buy our first investment property until 2018. Now, somebody who wants to buy a house today for $430,000, if you put a 10% down payment, your house payment would be 60% more than it would have been 3 years ago. Versus if you were renting that same house, it would only be about 22% higher than it was 3 years ago. So yes, rents have gone up a lot, but not nearly as much as the average house payment. And so one thing that this story talks about is how you have a bunch of first-time home buyers or people sitting on the sidelines in general right now that want to buy, but are officially priced out due to where the monthly payments are. And this is why I keep telling people, when interest rates come down or home prices come down, or both, whatever happens first doesn't really matter, you're not going to see a huge surge of people come back into the market, guys. And the reason why is simple, because when that shift actually occurs and when we start seeing the home prices come down, or the interest rates, whatever it is, that means trouble. The reason why things are coming down significantly, whether it's the rates or the prices, what that means is something has now fundamentally broken in the economy and the housing market to make that happen. And that means that you're going to have a lot of people in distress, not able to buy, that might be in the position to buy right now, but won't be able to when the opportunity actually strikes due to all the economic factors that are outside of their control. Because what this says is you have a lot of buyers waiting on the sidelines for their payment to paycheck calculation to work for them. Well, guess what? The only way it's going to start working is if prices and or rates come down substantially, right? And what's going to cause that to happen? Because all the experts are saying there is going to be no major decrease in home prices. There's nothing like that's going to happen. Well, if nothing like that happens, then the situation is going to remain like this forever, right? It means that nobody's going to be buying or selling homes? No, that's not how it's going to go. Because even though you have 80% of US homeowners have a mortgage less than 5%, that doesn't mean that they're going to be able to hang on to that forever, guys. We're starting to hear more and more stories of layoffs again. We've already seen the foreclosures go back up to pre-pandemic levels recently. And there's a lot of these people that have these low rates, but they don't want to stay in the house. They want to move for one reason or another. Maybe they have buyer's remorse and they regret the house that they bought, or maybe they've been there for a while and they do want to move, but now they're trapped because they can't even afford the house that they live in right now if they were to rebuy it today. And this creates this dynamic where on paper it looks like these people who have the golden handcuffs, so to speak, are benefiting from this, but in reality they're being punished too, because all this extra equity in your house doesn't really do anything if you can't sell it. If you have nowhere to run to next, then it doesn't really do you any good. In fact, all it really does is give you a higher property tax bill, like I've been griping about here for the past couple of weeks. Everybody thinks it's so fantastic when your home value goes up. Yeah, it's great, guys, and so does your property tax bill. So how does that benefit you unless you're actually selling the house? It doesn't. And one thing that we know for sure is people don't stay put forever. Even if you have a favorable mortgage situation, life happens. There's many different reasons why people would give that up, voluntarily or not. I just think it's so crazy hearing this narrative that because so many people have these, 5% or less mortgages, that no one's ever going to sell, guys. And that's just not true. Because turning the house into a rental, especially right now with rent prices starting to come down, as well as the rental inventory starting to go up, that's probably not going to work out in most people's favor. And even if it does, a lot of people still don't want to become a landlord. And also a lot of people can't afford to buy that next house without selling their existing house. So becoming a landlord and hanging on to that house that they're in now isn't even an option a lot of times. In fact, one thing we can probably expect over the next few years is rent prices continuing to come down, because we're seeing the biggest surge of rent inventory that we have seen at least in a decade, if not longer. And Fannie Mae even is predicting that the vacancy rate in US multifamily buildings will reach 6.25% in 2024, which is above the 15-year average of 5.8%. Already the vacancy rate is starting to of go up, what this is doing is bringing rent prices down. We can already see this dynamic of how this can affect home prices starting to play out in the rental market, because as we're starting to see more and more rental inventory come online and rent prices starting to inch down, this is a perfect example that shows you the law of supply and demand. This is the same dynamic that drove prices to the moon when it comes to everything for sale and for rent, starting to show how things work in reverse with the rental market. But in many cases, and a lot of places across the country, we're not there yet with the sale market. And it also says here that apartment stocks are falling because they are underperforming. The buy-to-rent premium in a community called Avalon Bay Community and Equity Residential have fallen 6% and 18% respectively, while the S&P 500 has gained 8%. Really, the only winners right now are tenants. People that need to renew their lease right now are getting some pretty substantial deals. You need to be on the lookout for get 1 or 2 months free type of deal. Or if you want to stay where you're at, try to negotiate your rent a little bit lower, you know? Show your landlord like, hey, I can move to this place for $1,500 a month and you want to charge me $1,700. Maybe they won't want to lose you. It's worth a try. But if you are someone who's confident that right now is the right time to buy for you, just a quick reminder for you guys, if you want to buy or sell, use my link in the description below of every single video. I have a free service available to everybody who watches my channel. If you need a real estate agent across all 50 states of the country, I can set you up with somebody completely for free. Not only does it benefit you, but it benefits the channel, and I appreciate it if you use it. Now, the next thing is HOAs, meaning homeowners associations, are basically trying to steal your home from you. And let me explain what I mean. Now, this isn't exactly a new phenomenon, but every time I see something about this, I have to bring it up so people know what they're getting themselves into if you were to buy a house in an HOA community. Kind of like this. This is a gated community, and they charge an HOA fee here. And even though you don't really get any services, they don't cut your grass, they don't paint your house, they don't do any of this stuff, there's an HOA fee. And if you don't pay those HOA fees and you become delinquent on them, it can become a major headache for you. And this was highlighted in a video I actually saw on YouTube yesterday from CNBC. Maybe a lot of you guys saw this video. This video shines a light on some pretty startling statistics, guys. First of all, I didn't know this, but this is not good news. And that is 82% of brand new homes that are being built in the US right now are part of an HOA. And that's mainly due to the fact that local governments are actually requiring this. It's not like the home builders are saying, yeah, we want to put everybody in HOA. They're requiring that the home builders make it an HOA to even get the permitting to build the community to begin with. And then you would say, well, why do they want to do that, Michael? Why does the local government care if you live in an HOA? Well, I'm glad you asked, because they don't want to do anything. In fact, what they want to do is have you move into an HOA community, a brand new one, so that way you and all your neighbors can cover the costs of maintaining the roads and the street signs and the sidewalks and everything else that goes along with maintaining the community. Because if you build a brand new HOA, it'll be on you guys, not on the city. Meanwhile, they can still collect top dollar in property taxes from everyone and take all your money. Sounds like fun, huh? I see a lot of people that are like all in defense of paying property taxes, like this is somehow a good thing. Reality is, guys, like this is probably one of the biggest scams in history, if you ask me, especially since you can have a paid off house and still never really own your house or the land it sits on, because if you don't pay, they will take it. But anyways, the typical HOA payment for a lot of neighborhoods throughout the country is about $200 to $300 a month. Now, ones like this here, I think it's probably like maybe that much for the whole year. You really don't have to pay much here. But some of the newer developments, they charge that much because, like I said, your money is the one paying for the new streets and the street lights and the street signs and the sidewalks and all this stuff. The city's not paying for it, and the property taxes that are being collected aren't paying for it. You are. So in this video, they talked to this woman that bought a house in Georgia, and their HOA fee was super low. It's only like $100 a year or something like that. Anyways, they bought the house back in 2008 because there was so many problems with people's financials back then. The previous owner had unpaid HOA dues that they were never told about, that they were never disclosed when they bought the house. And what this person should have done is they should have gotten legal help all the way back then when they discovered that they inherited a house that had unpaid HOA dues, because that's something that should have been cleared up at closing through the lien and title search, but obviously it was somehow overlooked and was not paid off. Now here we have a house that's been flipped around a couple times in the past couple years. It's currently listed for $2.35 million. It's a waterfront house. They sold it back in 2018 for $807,000, and then it sold once again in 2021 for $1.4 million. Now the new owner's testing the market, tried initially listing it at $2.6 million, didn't work out, couldn't sell it, and now down to $2.35 million. Current annual property tax bill is a cool $23,000 per year. And it's so funny because coincidentally, right across the street is actually a house for rent, which is going to completely prove the point that I'm making in this video. The house across the street is a whopping $5.3 million, far more expensive, but I want you to focus on what the monthly payment would be if you bought this house. It would be $39,000 according to Redfin, and that's with a 20% down payment, which would be over $1 million just for the down payment. Now, this same house is actually for rent as well, and if you wanted to rent this house, it would only be $25,000 a month. So let's do some math here. That means this house is a whole $14,000 per month cheaper to rent, or 35% cheaper. Not quite the 52% discount, but still 35% less is a significant discount for renting a house like this. So now this person bought this house in an HOA, thought they were going to be moving into their dream home, ended up being the nightmare home because they inherited the old owner's unpaid HOA dues and the late fees that came along with it. And starting all the way in 2015, so they took a good 7 years to start doing something about this with the HOA. They started garnishing her wages. They put a lien on her house, even though the lien was only for $1,600, and then they were able to start tacking on additional late fees and service fees and all this extra crap, basically, and it all ballooned to like a $6,000 balance, okay? That's when this woman started taking this seriously, hired a lawyer, went to court. Her lawyer was able to get her an agreement with the HOA's lawyer to pay only $3,200 instead of $6,000. So she did that, and even after she paid, she was still getting bills in the mail, still letters saying, hey, you owe us $8,000 still. And she estimates that between the legal fees and the $3,200 she had to pay and all the other things with this, she's already forked out about $12,000 over this situation, which is unbelievably ridiculous. And one thing a lot of people don't realize is this is a tactic the unscrupulous ones will use in order to basically repossess your house, guys. Because once this lien continues to grow like that, this $12,000 bill balloons to $30,000 or whatever, then they'll actually foreclose, because they could have foreclosed instead of put the lien on the house and garnished her wages, but instead they decided to do that probably because they knew they would be able to make that bill continue to grow to the point where it justifies foreclosing on the house, and then they'll foreclose on the house and steal your house for nothing because you only owe them 20, 30 grand, whatever it is, but you can't pay it, and then they'll turn around and sell your house to somebody else for $400,000, pocket all that difference, make a huge profit off of you lost your home, and then turn around and do it all over again to the next unsuspecting buyer in the new HOA neighborhood. So this is a huge problem that home buyers need to look out for. This is happening to a lot of people across the country. It's not just like a few communities here and there. This is a nationwide epidemic, guys. And it's interesting too, because as somebody that lives in a condo and has to deal with a condo association, a lot of people like to complain about condo associations, but I can tell you firsthand, even dealing with a lot of bad ones here in Miami, I've never seen tactics on this level to basically try and steal people's homes, okay? I have seen situations where the HOA has had to foreclose on people in some cases for not paying their maintenance fees, but nothing like this, where they're actively trying to make your bill grow and put people out of their homes as a strategy, essentially, to make money. Now, I have seen theft and embezzlement in condo associations where people are paying dues and nobody's paying attention and a lot of the money gets stolen. That does happen, which is why it's important that if you're going to move into a condo or an HOA, whatever, you don't necessarily have to be on the board, but you should be paying attention to the financial documents. Always look at the budgets, always look at the minutes that are sent out every single month when they have their meetings and things like that, in order to stay on top or stay in the loop of what's going on in your HOA, because a lot of people just pay and turn the blind eye. But that's how these things start happening, when nobody's paying attention. So just a big warning for anybody who's going to move into any sort of HOA community, whether it's a house community like this with an HOA or a condo with a condo association. Now, speaking of condos, one thing I've been covering for you guys every time there's an update is what's going on with these new condo laws that are going to be dropping in 2025. And basically, it's being predicted that there could be a lot of people losing their house, losing their condo to foreclosure if they live in these buildings that are insufficiently funded. And I agree, because in fact, last year, I shared with you guys a real world example of a place that one of my clients owns, and his maintenance fee is about $800 a month right now. But in 2025, it can shoot up to as high as $2,400 a month once the building is required to have fully funded reserves. That's triple for anybody who's paying attention. And even if you have no mortgage, that's a lot of extra money to come up with every single month, whether it's for as an investor or somebody that lives in the unit. You're literally talking an extra $1,600 per month, guys, in that one situation. And that's just one building. And the worst part is people are getting hit with a 1-2 punch right now. At the same time that we have these new condo laws dropping in 2025, you also have Florida getting hit with these major insurance problems where insurance is going through the roof. In my building last year, from 2021 to 2022, the master insurance policy doubled, guys. It doubled. It went from $400,000 a year to $800,000 a year. That, along with all the utilities, all the payrolls, everything that we have to pay for, went up substantially. You're getting hit from all different angles right now. And so one thing that's being questioned is if they're going to ease back on these laws as the time gets closer and too many people are in danger of foreclosure. And right now, most of the Congress people in Florida don't think that they're going to change this, because a lot of people say, oh, maybe we should extend the deadline by 3 to 5 years and help people out a little bit. But if they were to do that, then you're just going to get the buildings that have been delaying having reserves, just like the one I just told you about. They'll just kick the can down the road an additional 5 years until they're forced to comply. So kicking the can down the road is not going to be the right option for this. The reality is there's just way too many buildings around here that are severely underfunded, especially when it comes to reserves. Many of them don't have reserves at all, and that's why they're going to see this substantial jump in how much they're going to have to pay for their condo fees. And it's probably unlikely that they're going to repeal this law, because after we had the collapse in Surfside a couple of years ago, this shined a light on why all these buildings need to be up to date with their reserves and have money and go through these 40 and 50-year inspections in order to make sure that something like that doesn't happen again. People that own these condos, especially old people, no offense if that's you, want to kick the can down the road similarly to the government. And it kind of makes sense, because if you're 80 years old and you don't think you're going to live much longer, you probably don't want to spend your money on fixing up this old building that you're not even going to get to enjoy, because by the time all the repairs are made, you're probably going to be dead. In fact, they quoted an old man from this story here telling people, hey, you need to increase your reserves before this even became a law. And one guy said, young man, I'm 77 years old. I'm not going to worry about what's going to happen in 10 years. Let my children worry about it, because they'll own the condo then. And the problem is that we had so many people that just kept waving and waving. You have buildings that literally haven't done anything to make any substantial amounts of repairs for like 40 or 50 years, and now the rooster's coming home to roost. So that just shows you the mentality of people that own these condos that don't want to sink another dime into it. And then you have people like that as well that don't want to even pay insurance anymore, because if you have a paid off unit, you might be able to get away without having homeowners insurance, just like somebody that has a paid off house. However, more buildings are starting to crack down on this. Mine actually won't let you do this anymore. If you have a paid off unit in our building, you still have to have a homeowner's insurance policy, and every year you have to send them proof that you have it. And it actually helps protect everybody in the building, because say you have a problem with your unit and there's a massive leak from your toilet or something into the unit below, and you don't have insurance and you can't pay for it, then it creates a problem between you and your neighbor and who should be responsible for paying for it. And unfortunately, a lot of new people that are moving here to Florida buying these condos have no idea that this is a problem and really don't know what they're walking into right now. I've tried warning people for the past year and a half, guys. I've been talking about this here on the channel, but unfortunately, not everybody watches YouTube, or people don't care to watch content like this, and they're gonna be the ones getting massively screwed over on this. So likely what you're gonna see from this happening is you're gonna see a lot more foreclosures coming in the short term, because people can't afford to pay the new maintenance fees or their mortgage. So you can see foreclosures coming from both the lender and the condo association, depending on what they stop paying and if they have a mortgage or not. Unfortunately, you're gonna see homelessness go up from that, because the more people that can't pay, more people get kicked out, more people on the street. So don't say I didn't warn you about this. If you're looking to buy a house in one of these HOA communities, or you're trying to figure out if it's more expensive to buy or rent, or if you're looking to buy a condo, you should be an expert in this by the end of this video. So if you enjoyed this video, make sure you subscribe to the channel. And if you don't want to wait for my next video to come out, check out this one on the screen right over here, and I'll see you in the next one.